virus or any of that sort of stuff. There's really no need to get into that. We know it's everything that's going on at the moment. So I really hope that that everybody that's affected by this, particularly here in Australia or abroad, for yourself, Darren, I know we've got guys from all over the world inside the Discord. So, as always, feel free to reach out to Ads or I. There's, probably not much that we can do, but we can certainly have a chat and help you with anything. That's hence the reason why we've made the Discord free while we're inviting people in for this 14-day trial as well. Whatever we can really do in this time, please don't hesitate to reach out to us. So let's get into that. Old Jihan and the Bitmain, everything that's going on with them. Last year we saw that they were opening up a new mining facility in Texas, and now finally the S19 series is available locally, as in locally overseas, not internationally as of yet. Saw a lot of people mining crypto in the very early days. Now you look at the energy expenditure and what it really takes to earn back the price of your miner or to earn a Bitcoin. It's pretty phenomenal. But they finally announced the S19 crypto miner. So this has been labeled by Bitmain as the future of mining. This is what they're saying in the ASIC miner lineup. So the Antminer S19 series comes with two different variants. So there's the 95 THS and the 90 THS model with a higher power efficiency, and then a Pro version at 110 and 105, both with a power efficiency higher than what we've seen before with the Bitmain miners in the past. So as we go down, they announced it earlier yesterday or today. So what's new about these latest additions to the Bitmain collection? Well, the power. So the S19 has the power to potentially make all previous models obsolete, as it says here on screen. The Pro Edition provides a hash rate of up to 110 compared to the Antminer S9 at just 14. It also beats out the S17 model, which reaches just 55, making it Bitmain's most powerful mining rig yet. So both models come with unrivaled energy efficiency. This is something all Bitcoin miners will need to be studying right now at a time when the hash rate is dropping along with the BTC price. So as it says here, the changing face of crypto mining. So with the Bitcoin halving on the horizon, Bitmain's announcement at the end of Feb may have seemed like the perfect timing. After all, great power and energy efficiency at a time when miners have to fight for smaller reward is definitely appealing. Moreover, since the rigs have a far higher hash rate, fewer are needed to mine a single Bitcoin. So, however, with the Bitcoin price below the break-even line for some, we'll probably see many miners capitulate from the network, especially if we test the new low. So, do I recommend mining? No, I really don't. But interesting if you want to get into it now would be a good time. So Microsoft 10 security flaw threatens the crypto users. What does that mean? Well, it's an error that was discovered recently, comes with Windows Defender version 4.18, which comes with Microsoft Windows version 10. So reports are emerging that this version does not fully complete scans by either quitting or skipping over specific files. The latest team replicated the error in their lab. So the problem appears to affect only Windows 10. May not occur during offline scans. It's also possible that full scans are taking place and Defender is merely not reporting correctly. Microsoft has yet to address the issue, but the current problem should be taken pretty seriously by a lot of guys, and I know a lot of people here probably have the newer version of Microsoft 10, and they should take it seriously as crypto-related malware continues to sort of skyrocket, and we find that the malware, like as in clicking on banners or opening emails or downloading things to computers, the biggest way that these ransomware hackers are getting into your computer and stealing your details. So a lot of crypto investors keep their funds in desktop wallets, which can be compromised by keyloggers or other programs designed to capture sensitive data. Malware also exists that replaces pasted Bitcoin addresses, causing funds to be redirected to a thief's wallet. Even experts can fall victim to these scams. Late last year, the VeChain Foundation lost over 1 million BET as a result of malware installed on a developer's personal computer. Also, thieves have also been able to steal cryptocurrency from a myriad of exchanges due to lax security protocols. So the problem reflects need for security. So given Windows Defender's history of lackluster performance, this problem is no surprise. However, it underscores the importance of proper handling of crypto funds. There's no shortage of very secure software-based wallets. So have a look outside of Windows Defender. These are really, really simple things that a lot of beginner crypto traders overlook. Like even when you go to sites like Binance or BitMEX or whatever it is, look for the SSL certificate. Look at the actual www address that you're logging onto. Even though I have Binance, the official Binance page saved in my browser, I still look at the www address all the time. And we had an ex-member of UTG get scammed just like that. That was through the news Cryptopia in New Zealand. They had logged into what they thought was Cryptopia. There was a keylogger on that page, obviously because it wasn't cryptopia.co.nz, I think was the address, and they got all of their coins. Thankfully, I think it was DApps at the time. I think was the coins that were stolen, ads, I think, from one of our ex-guys. So it's very easy, and that comes from a very experienced crypto trader. So don't slack on these types of things. Moving on, BitMEX. Well, BitMEX have been under a lot of pressure. We saw last week that we spoke about that BitMEX was looking for developers for what looks like will be a KYC system for BitMEX, and now they're opening up about this crypto insurance fund. Last week or the week before, when BTC saw that really heavy sell-off, we know that BitMEX essentially shut down. They said that it was an attack on the system. Some were saying that because there was such little liquidity left in the exchange, they purposefully closed the system. A lot of different things sort of going on. But in an official blog post, BitMEX explains that the exchange received a lot of questions over the performance of its insurance fund on March 12 and 13. It also details what the insurance fund is and why it's needed. Contrary to the popular opinion, BitMEX states that it does not cover BitMEX running costs or contribute to BitMEX profits. They also said that it is not used to influence markets intentionally or otherwise. And you can see it on a BitMEX post that was earlier today on Twitter. It says, today we answer your questions on the insurance fund and how it performed on the 12th and 13th of March. Please refer to our blog, which you can find there. So this insurance fund, says BitMEX, is in place in an attempt to prevent auto deleveraging. This is where the position of profitable traders are deleveraged against liquidated positions to prevent bankruptcy. So during this unprecedented volatility that they state here on 12th and 13th of March, the fund acted as the last line of defense by preventing this auto deleveraging, or attempting to prevent this auto deleveraging. So what they said here was the insurance fund exists to act as a last line of defense to prevent auto deleveraging. On 12th and 13th of March, despite the extremes of the market movement, the ADL was completely prevented. They also note that unlike traditional exchanges, its traders never owe more than the margin position posted, thanks to the size and the actions of the funds. So the post then goes on to sort of detail terms that traders must keep in mind when using the exchange, such as bankruptcy price and liquidation price, and when the liquidation engine will take over position. And they said that actually 80% of the post deals with the liquidation process. So you can probably just skip to that part where people want to read about the liquidation engine and the insurance fund. So what they've said here is the trading algorithm unwound this position into the market at prices that became gradually more aggressive, or as in lower, as the long position grew and its time holding the position progressed. They said during this time, the liquidation engine's trading activity realized significant losses, crystallized as drawdowns from the insurance fund. So they didn't exchange, or however, the exchange does not explain how that contributed to the hardware issues that we had. I remember I was in a meeting at the time. I wasn't listening in the meeting. I was trying to trade this volatility, and a lot of us couldn't log in. But they don't also answer why the insurance fund suffered such a little loss. It actually made a profit during this time. So there's still a lot of unanswered questions that go against this. But I would highly recommend that you jump onto Twitter and have a little bit of a look and see what is going on there with BitMEX. So you might have seen this, which is really interesting as well. Amid contentious debate over the massive stimulus package in response to the coronavirus pandemic, Democrats in the United States House of Representatives look to implement the digital dollar to streamline U.S. payments to citizens outside of the traditional financial system. So they have touted this digital dollar for direct payments to families. So a draft of the legislation circulating as of 23rd of March proposes the creation of a digital wallet for US citizens to be maintained by the Federal Reserve within a section entitled the Direct Stimulus Payment for Families. So what this envisions is a $2,000 monthly payments to every adult earning less than $75K a year, at which point the payments taper off. These payments would last until the economy recovers. So while the proposal does not indicate the option of providing checks, it would require member banks of the Federal Reserve to maintain digital dollar wallets for all clients. So very interesting that, Ads and I have sort of said if there ever was a catalyst for digital currency or for Bitcoin, this is probably going to be the worst economic crisis and things that we see in our generation, at least. And if there was a case for Bitcoin, we're still looking for the decoupling from the regulated markets and everything that's coming amid all of this drama in the markets. But if there ever was a time for digital currencies, this is certainly it. And that's pretty much it for the news. So let's get into the TA and the market scan ads. We'll go over BTC. We'll go over ETH. We'll look at a few of the higher alt cap coins, and then we'll obviously get into the regulated markets as well. So if you do have a suggestion on coins or things that you would like to see, pop it in the chat now, and we will take a look at it.
Sweet. Thank you for that time.
No sweat. Just before we go on, for anybody that is having a little bit of look ads in your chat, we are doing a 14-day exclusive access to the Inner Circle now as well. We're giving away all of the juice that we provide inside the Inner Circle. So we do daily TA, daily BTC updates. We're not looking a great deal at alts, obviously, at the moment because of the way that the volatility is affecting ETH and BTC, which we look at most. But this is everything that we provide inside the Inner Circle for 14 days. So you can go to the link, which we'll post below, which is unitytradinggroup.com/product/14-day exclusive access, and you can come into the Inner Circle and hang out with us completely free for 14 days. You'll see we have a whole bunch of custom indicators that we talk about as well. Our trading strategies, these Tuesday night sessions, Thursday night sessions, because a lot of us are quarantined at the moment, unfortunately. But look at the positive side of things. We got a lot of time to sit in front of the charts and to be posting TA. We also posted inside the Discord today as well any sort of topics that you wanted Ads and I to cover. And there was pretty unanimously, we've been looking a lot at GAN fans as of lately and trading with GAN and GAN pivots, the Forex markets, how to use different time frames to assess entries on certain types of coins. So a lot of content for Ads and I to cover over the next couple of weeks while we are self-isolating. I am not unwell, nor is Ads. But we're doing our part by staying at home. So if you do have suggestions, feel free to DM or even message in the Discord topics that you'd like to see us cover. And we've got a lot of time on our hands. So happy to dive into anything you want, and we'll publicly share all the knowledge that we know.
Sweet. All right. As we do every week, what are we seeing, everyone? Are we going up, down, sideways, Ty? What do you think? Where are we going?
We can't deny things are certainly looking good, but looking at XBT, which is where I've sort of been putting most of my focus, as in the BitMEX market, I haven't really been looking too much at Coinbase or Bitfinex so much. A lot of my time's been spent on BitMEX. I've not traded on Binance or any of the sort of more traditional exchanges, if you will. But looking at where we are now, we're very close to making a higher high from this high on the 20th of March. So as we sort of said this morning, yours and my trading styles differ a little bit. I tend to, when I find a strategy that excites me, I tend to dive pretty heavily into it, which has been GAN for me. And we did see a really nice bounce on the 23rd of March, right off the 50 fib, which was, and I said this morning in our BTC updates, when we have these GAN line intersects that create these X bottoms or these X tops where different GAN pivots intersect, we tend to have really good levels of support in a downtrend or in an uptrend, really good levels of resistance. So we pretty much hit bang on that GAN intersection at around the 23rd and off the 50 fib before we had this run up. And my next sort of level of where I was looking was looking for a clear break above 7.65, and we pretty much hit bang on the next Garn intersection. I'm happy to post this. It's very busy, obviously, but for anybody that's watching the chat, I'll post it in here. They can sort of see where we are now. We've hit a bit of an intersection in these. We can see here we hit very closely on our 50 and our intersection of our Garn level there, and then we're hitting our next point. So obviously, looking at fibs, the next sort of real area of interest is going to be around sort of 6.9 to probably 7.1 at this stage, and then I'd really love to see us go further and up towards the 7.6 mark on the fibs. But with this volatility that we're seeing at the moment, and we did a live trading session on Friday night for our scalping degenerates that have been joining us, which was a lot of fun. We had a lot of guys on that session. It was really a lot of fun. Looking at our Stotch RSI has been something different for me. I've not really looked at Stotch RSI as much over the last couple of weeks, but certainly using it on a scalping sort of basis, Stotch RSI and Bollinger Bands have been a real phenomenal little strategy that I paired together. So looking at our Stotch now, even on the 4 hour, we had a pretty decent Stotch, or it looks very similar to MACD if you're familiar with MACD with your faster and slower moving average. That every time that we've had a cross below or outside of these parallel lines, mixed with some of our own TA and steamroller and trend breaker and the other custom indicators that we've had, has yielded some pretty good results as of late. So, yeah, I'd be interested to hear your thoughts on where you think we're headed at.
Look, it's very similar to what you've written there. Let me just get rid of your thing.
Yeah, I'm trying to clear that. Sorry. There we go.
Yeah. Okay. So it's very similar to what you've written, and I don't know what's going on with this, but anyway. What I've been looking for is some sort of respected areas for these supplies and demands and stuff like that. So the first level that I was really interested off this bottom piece here was this one here, Ty. All right, where we pushed through that. And we've pushed through it again the second time. And now all I'm looking for is market structure and these Fibonacci levels to be respected pretty much. If we're looking for the swing low to the swing high here, if we're looking at this move just there, we've come back, hit the 50, and I missed that, to be honest. I actually looked at this while I was at work one day, and I said, oh yeah, it's been respected on the 50 pretty well. And then and I completely forgot to draw it in my own chart when I got home. So I was looking more at the short-term demand level there at the 61 fibs, just on that green line. But anyway, we did push off the 50, and we are making some new structure here right now. Look, it's going to be do or die right now, in my opinion. We could either double top, or we could create some more structure and head to maybe towards this 50 retrace on the daily. So if we go across here, you can probably see it. If I condense the chart, there it is. So you're looking at that 50 retrace line here, all right? But if we don't make that structure, then there's no way we're getting back to this supply. We're just going to topple over again and create that range that we were more referring to last week and in the Discord, Ty, where we're just going to bounce around and create a trading range and accumulate for a little while. So it'll be interesting to see what Wyckoff says and how I think Michael in the Discord's following this against the Wyckoff accumulation phase. But honestly, where are we going? If we don't make any new structure here in the next probably 8 hours or 12 hours, I'd say in the next four 4-hour candles, we could probably see the 6-1 again, which is going to be at 5.9 or 6K, and then after that we'll have to assess it when we get there. So look, something along the lines of this would probably be my guess at the moment. That's pending this double top. If we make it, if we do create a double top, we have to wait for this candle to close in about 4 hours. If not, then more than likely back down to the 6-1, and that's around 6K or 5.8. So an interesting one. I wouldn't be jumping into a long.
I agree with that. I definitely want to see what happens around sort of 6.95 with the top of that next sort of fib line, and then where we go from there. What does our volume profile say, ads? The VPVR is something that we've been using a fair bit over the last little bit as well. We'll probably do a video on that at some sort of point. If we change our visible range to 120,
Yeah, so that's very consistent with that demand that I've drawn in there. So we'll see how that gets respected. We could very well push right back down to the 6-1 before making another decision in this trading range. You've missed your opportunity to long it at the moment if you're trading on the 4 hour or on the higher time frames, because this move is well and truly underway already. And honestly, it's a little bit tricky to pick a short right now if we're talking about it, because we're making a little bit of new structure just here to the right of this price, which was on the 21st, the 20th of March. So honestly, if I was going to be jumping into a short, I'd be waiting for this range here at the moment, or I'd be looking for this to be broken as a high to confirm that we're probably going to make another lower high before heading back up to that supply. So it's in between levels that I'd like to take positions on. So honestly, we could go either way, but yeah, a double top or a break and a continue up top.
yeah, I'd really like to see 7-2 play out, because that's where I would definitely be looking at a short opportunity. But looking at our VPVR there as well, we've got some high liquidity or higher liquidity nodes here as well, and then obviously some high liquidity nodes that line up really well there with that level of demand as well. So a very interesting time. I can see myself being online pretty late tonight, I think, looking for these potential moves. We've said a fair few times over the last probably 3 or so months that Mondays and Tuesdays seem to bring the best level of price action almost for the week. And we saw that yesterday on Monday as well with the price action that we saw, and we've seen it again today. So, yeah, for traders that are looking for potential opportunities, it seems to happen almost when I wake up every Monday morning or Tuesday morning at around 4:30 a.m. or 4:15. That's when the price action seems to be playing out. So if you're looking to make money in this market, that's definitely a time to be awake, looking for potential opportunities. So yeah, mine and Ads' thoughts line up there. It's we're at a pretty critical time now to see whether we're going to be looking at shorts or looking at longs from this position. But we've also got to keep in mind too, we are in the middle of what could very much be labeled as a depression. We're certainly in a recession at the moment. We're in a very heavy time of market sell-offs across the board, not just in Bitcoin or cryptocurrency. So keep that in the back of your mind before you think that we're going to be running up towards all-time highs anytime soon. Keeping in mind we also do have the halving coming up in May. I think it's the 20th of May is the next halving date. So that's often been a catalyst for a run-up. We saw it recently on LTC before it dumped. And we've also seen, how the scarcity of mining Bitcoin changes post-halving as well. So there's catalysts for up, and there's also catalysts for down as well. But I think in the short term or the mid-term, I wouldn't be surprised to see this sort of continuing upwards for the next little bit.
So look, yeah, just honestly play it as best as you can. If you're scalping, obviously keep your
small position sizes.
Yeah.
Small position size.
Keep your risk management tight and keep your position sizes in the right spot. But it is critical right now. Right now, what you're seeing right in front of your screen, it's make or break. So look, where you can probably see right now that we're getting held up just on this structure just to the left. So if we break above and close, then honestly 7-2's on the cards 100%.
100%.
If we don't, then it's coming back to 6, 5, 8. So we've got to wait for this candle to close in about 3 hours time, and we'll call it then.
Yeah, and we're very, very fortunate to have a lot of eyes and a lot of resources inside the inner circle. So again, that's another reason why you can join us for that 14-day free trial if you want to come along. And there's no credit cards, no anything like that. But we've got Steamroller, we've got Unicon, we've got Unimoku, we've got Trend Breaker. We've got all these custom indicators that we've built and developed that come completely free to inner circle members that along with TA really help to if you are a beginner trader, help you to identify trends and directions. And in saying that, completely separate from that too, Ichimoku is one that we use a lot as well. Bollinger Band, Stotch, which we've spoken about too. So there's a lot of opportunities there for you to sort of see where this market is headed. The VPVR I think might just be relegated to pro memberships.
Yeah, it is.
I think. But that's another great tool as well. So if you have any suggestions on things that you would like us to cover, you can let us know inside the Discord or email us or DM us, any of that sort of stuff. So let's get on to ETH ads. ETH is probably the coin I've been trading most lately, particularly on the smaller time frames. Talking to Craig's earlier beforehand, who is our who is our guy when it comes to creating indicators. He has custom built all of our indicators for us. He's an absolute genius. For myself, on the smaller time frames, the 15-minute has probably been the most well-respected and profitable for myself as I dive into the world of scalping. And, the benefit of trading on the smaller time frames is that a lot of the TA that you employ on higher time frames is respected just as well on the smaller time frames. And again, if you don't have access to our indicators, we did go over on Friday night Stotch and Bollinger Bands. We have a particular settings for Bollinger Bands and Stotch RSI that we find works best for us. But yeah, it's definitely a scalper's market at the moment. We had a lot of fun on Friday night. Probably too many drinks, but a lot of fun nonetheless.
Absolutely. With ETH, Ty, I'm seeing on the 4 hour is we're getting held up at this short-term supply zone from this move. Just there, it's not very strong, nor is it very relevant, but it is there. And that bounce came from some of these candles from this accumulation just here on the left. Honestly, it's in the same boat as Bitcoin, to be completely honest. If we do break above this, close above it on the 4 hour, then more than likely $180 is going to be where it's going to be at, because there's not much holding it back from here to there, to be honest. There's not a lot of structure just to the left. Yeah, if this doesn't hold, then it could probably trickle back to the 120 mark, and more than likely this demand is not even going to be relevant. It'll just bounce around this area here to the left, so it could land anywhere between 115 to 110 if we do get rejected here, Tyson. That's what I'm seeing anyway.
Yeah, I agree with that. And if we look at ETH on the daily ads as well, we saw the steamroller gave us a really nice oversold condition here and an entry signal as well, along with some, our CCI and our RSI being very well bottomed on that. So yeah, I'm very much of the same mind. I think really the only thing that's holding this up at the moment is kind of sort of 140, 150 before the next run up towards sort of like what you said, 180 or potentially sort of the 190 area in the top of this demand. This supply up here. So for myself personally, this is of course not financial advice. I feel there will be better returns in ETH at the moment from a trading perspective than what there will be BTC. For those who have smaller accounts as well, you can probably find that you might get better trading results out of, using the money that you have inside ETH. I think 140 to 190 is probably potentially going to yield better results than 6.5 to 7 or 7.2 or whatever it is if you've only got a smaller amount of BTC. So for myself, not because of that, but because I find that ETH is respecting TA really, really well, that's kind of going to be my focus for the next little bit, I think, is trading ETH. And, keeping in mind as well, I'm just going to draw, if we go back to the 4 hour ads, we've sort of got this structure as well holding us up. So it's really at a pretty critical time to see where we go. And I think if we break above this level here that ads has got highlighted in his supply zone, then I definitely agree with the fact that that it's likely that we'll be heading up towards this next supply zone. So there's very little structure to the left holding that back.
That's exactly my thought process. So it's pretty easy to follow. It's obviously, we need a break and make some structure above at $154.30, whichever that high was there. So 154.40 cents. So if we make some structures just above it, we can say that we're making some higher highs and potentially look at that 180 mark. So we'll see how that
think that
out.
any pullbacks we have on ETH may be short lived at this rate.
It's just circling back to what Ty was saying about returns. You're definitely going to get better returns out of Ethereum. It's a smaller market cap, so it takes a lot less money to move the price. And going from 140 to 280 is not a huge move, to be honest. It's 100%, but it's not as hard as getting BTC from 6 to 12. if that makes sense. So it's definitely going to give you better returns if you're trading it a little bit more actively, and even if you're spot trading it on Binance, you can trade it against Pax, Tether, whatever you want. So yeah, you can even do it that way, Ty.
Yeah, 100%. And ETH is not really a coin that I had honestly had ever traded, but the only reason why I traded it, and Dara, you're on this channel, so you know who very well who I'm talking about. There's a guy that I was trying to reach out for an episode of the Trade Hacker podcast called Cold Blooded Schiller on Twitter. That's one of the very few guys that I follow on Twitter that really knows his shit. And he said that I think he was doing a scalping challenge or an ETH trading challenge, I think it was. And he was talking about using ETH because he understood ETH a little bit more than BTC, not because it was any of it being respected in terms of the TA or anything like that. And I thought, well, let's have a little bit of a look at ETH. He's a successful trader. I'll try and emulate some of what he is doing. And that was when PB, who's on this I think who was on this session tonight, and Craig's, who's our indicator god, we're talking about a few things. And I thought, well, let's have a look at ETH. And yeah, the second that I started trading it, it respected the TA better. The swings weren't as wild. You could obviously use a smaller position size with better returns than what you would on BTC. And for a lot of people that sort of know BTC, I've got my investment portfolio, then I've got my trading portfolio. I simply just moved a little bit of my trading portfolio over to ETH, and the results so far have been really, really good. Admittedly, some losses in the beginning. I'm not afraid to ever admit that I definitely lost some trades on that. But once you start to understand a coin and devote a lot of your time just to one particular coin, you understand how it moves and it reacts against BTC. And long story short, ETH is really my go-to trading coin at the moment, and has yielded some really nice results.
Yeah, I definitely agree with that. It's a great coin to learn on as well,
100%. Yeah, and I know you're engaged with Cold Blooded Schiller too, Dara. So it's it's a really nice coin to trade.
Yeah, for sure.
Just a quick question from Grant. How would you use indicators in Confluence on this chart to enter and exit a trade? So the main one that I can see, Grant, if you're watching this, is if you're looking at price, we're looking for, so what you're looking for on this chart is you've made a lower low, all right? Then you've made a higher low. So this low is obviously higher than this one. So the market is looking to reverse in the short term anyway on the 4 hour. And then again, you've got the exact same scenario where your lows are ascending. So you've got this structure here like Ty drew before. Okay. If you're looking to enter this trade in Confluence with indicators, so you'd be looking for, let's say this one, for example, all right, where we're looking to enter on a pullback. All right. If we're looking at this, you've got a couple of things you can look at. When we come back and replay this, all right, coming out of this zone, all right, after a couple of candles, even if we fast forward it a little bit, to there, all right, and you want to get in on a pullback because you know that this market is sending now, all right, you know that your your demand should be there, all right. The price hasn't even come back here yet, but you already know that your demand level is here, all right. So what we're looking for is we're looking for price to come back down, all right, and test our level of demand. All right, so there's one, we've closed way above it, so that's a good sign. So you can have orders stacked there if you like. And you've got a couple of opportunities to buy off this level. And you've also got your CCI ascending. All right, so you know that the structure is moving upwards if you want to use that for confirmation. You've also got your RSI ascending as well. So the lows on the RSI are also moving upwards, all right, alongside the price. And if you want to use our indicator, then you've got a sell signal up here. All right, you've got a couple of buy signals as the market's ascending with your steamroller indicator. And then as we've been respected on this demand level, our indicator steamroller hasn't actually made a lower low, it's double bottomed on that as well. So if we continue, you're in the trade, on 10x or 20x or 3x or spot, whatever, you're in this trade off demand using all three of your indicators for confirmation, if that makes sense.
And ads as well. We obviously know that that Ichimoku is a staple of our trading. So if we put Unimoku, which is one of our custom indicators, you can change between standard, crypto, conservative, standard, conservative. So if we put on the standard settings ads on the 4 hour, we can see what's looking like pretty much an edge-to-edge trade setup. So we've got an indicator there that the little white dots indicate an edge-to-edge trade. So what we kind of find with Ichimoku is that obviously Ikumo B and A are going to act as really good levels of support. So not only have you got demand support there, you've got cloud support as well. And then we have had a bullish TK cross here as well. If you were trading over here on the left with Steamroller on the upwards, hadn't yet given us an oversold, overbought condition like what it did there. So for me, that would be an entry right on the bottom of demand, and also the bottom of cloud support as well would be an entry to me. And that almost looks like a pin bar there as well. So a few different forms of what I would consider to be a pretty decent entry there.
You're looking at 1, 2, 3, 4, 5 different indicators, price action being the sixth one, to give you an entry on Ethereum on that pullback. So there's a lot of different ways you can interpret that. You can obviously take that away and form your own trading plan. But the main one that you should take away from this is you've got ascending price structure. That's the main thing anyone should look at the moment. You've got the low, higher, higher, higher. That's ascending. All right, so you could probably expect if we come back, we could probably test this again. And if we just test it and push up, that's still ascending. So that's what we've got to look at primarily, and then we fall back on our indicators to give us a little bit more confluence and confirmation on that. So yeah, I hope that is clear.
Cool bananas. All right, moving on. Let's have a look at ads just for interest's sake. Let's have a look at a few of our higher liquidity alts. First one being ADA. Let's take a look.
All right. Last time I looked at ADA was on the daily, bro.
Whew, and we're headed. We haven't looked at ADA for probably close to a month, I reckon.
Yeah.
Probably three weeks.
Yeah.
We busted through that previous supply, and we're headed right down towards demand.
So obviously, if you're trading this on a daily, on the longer time frames, your bias is descending. So we are descending. We've made our top, lower high, higher low. You know what I mean. But yeah, we are making descending structure all the way down. We're nearly at 100% retrace back to this level of accumulation we saw just on the left here. And then if honestly, Ty, we could probably still get back to our 404 demand level where we've bounced off multiple times in the past on these moves. If you can see that, you've got that's drawn on the 4 hour, obviously. But you could probably nip that up for the daily if you wanted to bring it up a little bit. If I just change this, one sec. Bring it up to here. So nearly got there. If we don't hold this level here, Ty, which is probably going to be the point of control if I'm not wrong, very close to, around this level is going to be the point of control. If we don't hold this level here, the 411, if we close above it on the daily, then absolutely back to 416, back to that demand level is going to be that target, I would think, for that downwards move.
Yeah, that wouldn't surprise me. And, even looking at I wish I had probably had a little bit more of a look at some of our indicators. Looking at Unicon and our EMA cross, we had a downward signal on the 26th of Feb. Looking at Super Trend, we had a downwards trend on a downwards indicator on the 18th of Feb. So yeah, looking at what you've got there on that demand, it might be a quick drop to that demand before a potential move back up. Steamrollers obviously talking to us, saying that we have reached some pretty oversold conditions. But I think if you're going to look for a bounce down here, I think it may be worth, this is not financial advice, placing some cheeky buys down on demand and waiting for a wick down. The markets don't often repeat, but they do often rhyme. So, we've sort of seen the same thing here and here and here, even here again. I wouldn't be surprised to see a pretty drastic wick down to that area before a potential move back up again. But alts, admittedly, I'm not playing any alts whatsoever right now. I'm just focused on F and BTC.
Yeah, so you've got some more confluence with the trend-based fib extension as well at the 1618, at the 442, 441 mark. So if we break below and close below on the daily, then yeah, that's going to be our target 110%, where we've wicked down into this level pretty much to the dollar every time, which is 400 sats. So I'd be looking at that as a pickup for a macro move to pick up ADA, and it's pretty cheap. So yeah, pretty cheap considering. Pretty cheap considering, but yeah, not financial advice.
Never financial advice. All right, let's look at some of the other majors. BNB, we've said time and time again that LTC and BNB tend to be, indicators of alt strength, I suppose, to a degree. Not looking very good at the moment.
Not right now. We have fallen through that level where we pushed off. That was on the 31st of Jan, that move up. So that's obviously...
was a killer trade.
Yeah, that would have been
That
decent.
was phenomenal.
That would have been decent. So you're looking at that ties referring to that one here. So descending trade.
And again, I said, keeping in mind we haven't looked at any of these alts in probably 3 weeks, I would dare say, probably potentially even longer.
Yeah, so these levels don't move really unless they're broken. So obviously that one's gone. Oops. That one's gone. And look at that. So I haven't touched this at all. We've got that one there. So it works. It does work. It's pretty easy to do, and you've got this information from a very long time ago. All right. So with BNB right now, the target's obviously going to be the 18,000 sat mark where we did bounce off. This wick is quite strong. All right. We wicked down, hit that level of demand, and then straight back up, closed above. All right. So if you ask me, this level of demand is still in play at the 18,000 sat mark. So you'd be looking for some form of confluence with some indicators if we were to get back down there, if you wanted to get into this long term. I'm talking macro here. This is macro. So we're looking at Steamroller obviously giving us a sign. We've got some upwards momentum in the CCI, or some upwards direction where we've bottomed out, created that V bottom on the CCI, and the RSI is getting towards that lower region there around the 30 odd mark on the RSI. So yeah, 18,000 sat mark is probably where I would pick it. Oops. That one there. So we'll have a look and see whether that gets respected over the next day or so, Ty. 18,076.
100%. All right, let's move on to a couple of other ones. Let's look at LTC and see what the market is doing.
With LTC, so that our level of demand was broken at the just under the 61. We're getting below the 78.6. Closes tomorrow morning, so there's still a little bit of time for it to pull back up. If it does not, then I would be looking at this level, this structure, Ty, at demand level at the 5,600 sats, where we did push off from that big run. Preceding that though, underneath that, if there's any structure, not a whole lot. Not a whole lot underneath.
Yeah, it's not much holding that back. If we don't potentially hold this level, I dare say we'll keep continuing down to that demand adds.
Yeah, there's a pretty fair chance I can say that we'll probably end up at 5,600 sats, and in my opinion, it's probably going to hold at 5,600. I reckon you could have a look at that.
Ads. Dylan has said here, could you use a break in demand as a short signal?
Absolutely you can. Absolutely you can. 110%. 110%. And I do often. But you have to be very, very patient. Because if you get a break in demand, more than likely than not, it will end up at the next one lower. So you've got those rules to follow. But more than likely, if you break a demand, there is a high chance that it could do shit like this, where it pushes back above it before it will come back down. So you have to be patient. If you jump into a trade underneath demand, be prepared to be in the red for a little while. Be prepared, because more than likely, if you do break it, sometimes it does make a lower high before it does continue down. So don't get scared about stuff like that. And it happens all the time in FX, where it comes down, breaks a demand, or wicks below a demand and then closes. A close below is a much better. A close below is a much better confirmation than a wick below. But honestly, if you just wick below a demand, generally speaking, not all the time, but most of the time, it will continue lower, because that wick is eating up the orders that are sitting within that zone. There is outlying conditions like shit like this, where you're looking at a very, very large wick to the upside. You're looking at a very, very large wick to the upside, where you've got a close way above that demand level. So you wouldn't you wouldn't take that as a condition to short. But because you wouldn't be taking a short under here, you wouldn't be stacking a short under here to catch moves lower, all right? Because it's a bit far away. So yeah, you need to play it by ear, and every scenario is going to be different. So just take that into consideration.
So ads, if we look at that chart that I just sent you, we posted that on the 3rd of March, and that was our call on LTC to where we were. So that was at 6925 sats. Then we had that demand, those two demand levels set on LTC. So that played out pretty well.
Yeah. So we were looking at the time. There was a supply up here that we got rejected on. We're looking at a double top at that supply, and then coming back down. The most relevant demand level is here. All right, and then you're looking at a bunch of candles that respected the zone just to the right of it to validate its location just to the right here. So yeah, the obvious move from there was going to be to the 6-1 and then eventually to demand.
And Super Trend couldn't have given us a better entry than what it did. What it did on that one, that was phenomenal.
Yeah, it wasn't too bad. Super Trend, not a bad one, and I've got to get a whole bunch of people on that. If you have Unicon already, Super Trend is built in. So if you've got Unicon already, then there's no need for just the normal Super Trend, because it's the same thing.
Yeah, and that comes for free with anyone that's inside our inner circle. We have 4 or 5 custom indicators that we've built around Ichimoku. It's some custom EMA crosses. This Super Trend, which you can sort of see the accuracy of Super Trend is just ridiculous with the right settings as well on the higher time frame. So, all part of the inner circle inclusion. All right, let's have a look at. I want to have a look at VET ads. We haven't looked at VET for a little bit of time, and I think I might have a chart here of VET at some point. I cannot remember. I think here we go. So we're right down on demand. We were talking about VET a few weeks ago with someone. I think it may have been Tennille. If Tennille's on tonight's live session, I know we were looking at VET, and I'm just trying to find the chart now. what are we seeing on vet ads?
Well, this is a tricky one to put to chart because you've got two levels of demand that we're looking at. So you've got that one there, and a lot of the guys in IC that use this fairly regularly. You could probably see another one here. All right, and I have said in the past that more than likely, if you've got two levels fairly close to each other, if it's at the bottom of a trend, you obviously use the lower one. If it's at the top of a trend, you use the top one. So this one obviously was in the incorrect spot, so I can take that on the chin. That's no problem. If we move it down to the spot where it's actually meant to be, all right, using this red candle here to the left, we can see that we've got this big wick up from that zone. So there is quite a lot of orders stacked in the book on spot to push that up, and we're slowly descending towards that again. So you're looking at 39 sats high. That's what I reckon at the moment. Adam, the settings for Super Trend up in Discord. Where are we?
We'll get them in there at some point. We'll get them in there tonight, and we'll share that for everyone.
Yeah, we'll do that. Instead of doing it now, we'll do that. We'll do it in Discord. Yeah. So what are you seeing on Vet Tie? What are you looking at?
No, I'm agreeing with that. I'm just trying to go back through and find this this TA that we did on Vet like 3 or 4 weeks ago. And I'm certain it was very much what you've said there. Here it is. So I'll post this for everyone. Thank you very much. My beautiful fiance bringing me dinner. She's a good egg. Yes, I do want some cheese. Thank you very much. Let me just, I'll post this for you. This was our TA going back on the 10th of March.
I don't know if I can access that. I'll try.
Inside the chat?
I'll try.
Oh, sorry. Let me try that again. There we go.
Same one. Is that the one?
That's it. So that was our TA from the 10th of March that we had shared with Tennille, who had asked us about that earlier.
Okay. It probably would have been better if I drew an arrow there. It probably would have made it a little bit more sense. But yeah, you could probably see what I was looking at the time.
Yeah, so that was at 59 sats. So so we've headed down a fair bit since then.
Yeah, absolutely we have.
Vet's one that runs on hype. When we've said this to a fair few people inside the inner circle as well. When Vet seems to have a very good community of traders around it. You've got guys like Kurt Connolly, who is constantly sort of supporting it and shilling it, if you will. And when it does get on a run, it runs very, very well. But when it starts to head down, the people who love Vet capitulate pretty quickly. So it's definitely not a coin that I'm trading at the moment. And from my TA here, we're sitting right or just below the 27 fib mark, and then the 61 fib mark is at around 28 sats. I really hope we don't get there, or sort of 30 sats.
There's a lot of structure to get through before then.
A lot.
Like we're looking at the 38 sat mark is that level of demand. You've got the itchy cloud support just on the left there as well. If you can't see that one, you got a lot of indicators telling us that we could be exhausting this move down, right? Alongside RSI's just floating to the right there, and this just comes down to the TA and respecting your own TA. If you've come to the same conclusion I am, I'm looking at 38, 39 sats. Our steamroller, our CCI is pointing, giving us an ascending structure there. RSI is quite low, so look, 38 sats might be a go for this one, Ty. We just got to wait and see, and set some alerts and see what happens from here. Yeah,
anyone trading alts right now needs to be very, very cautious.
Yeah, just adjust your position sizes to.
We're just showing what we're seeing.
Yeah.
All right, let's get on to the last one for our crypto markets, being XRP USD, and then we're going to get into the regulated markets, gold, silver, oil, and some of the FX major pairs.
So XRP is in a very similar spot to when I did this chart. I think it was last week, or it would have been Thursday night last week, I think, Ty. We looked at FUSD on Bitstamp. But honestly, this level of demand is super strong. Like, this level of demand is like, I've never seen it push through it, and I don't think it will. I think we'll push up from here. To be honest, we're starting to move up towards our baseline on the Ichi, on the normal settings on the Ichi. So moving up towards that 18-cent mark, and quite possibly back up to this mid level of supply up here at the 22, 21 or 20.5. There you go, 20.5 cents. I honestly don't see XRP falling below, even this week at 11 cents. Like that's cheap for Ripple, even though a lot of people don't like it, but it is cheap as chips for that. So I do think our baseline's the next target, alongside our supply at 20 cents and 20 cents or 205. So 0.205. So 20 cents basically. 20.5 cents.
Yeah, and that would line up pretty well with around between 19 and 20.438 with our VPVR. Those are sort of the next high liquidity nodes. So I think if we can breach sort of 15 cents, we might potentially end up gapping up towards 19 cents. Well, that high volume node around the 1920.
If we're looking at the daily and with the VPVR on the daily, the most liquidity we're looking at, or the point of control, is the 23-cent mark at that level of supply there, right smack bang in the middle. So that's still on the cards as well if we're looking for further moves to the upside, depending on what happens when we break, or if we break this level at 20.5 cents. So we'll see how we go with that over the next little bit. XRP, one of my favorites to trade. So yeah,
one of my most hated to trade ads.
I love it. It's the best. No, it's good. It's good.
Yeah, and Unicon was giving us, or Supertrend rather, was giving us another really good exit signal on that as well. So that was phenomenal signal by Supertrend on that one. All right, let's get into the reg markets. Let's have a look at our major pairs, and we're going to look at gold and silver and oil ads.
We've got to be very careful because we're streaming this on YouTube.
This is not financial advice. This is purely only trading education. We are not suggesting any entry or exit signals. We're purely just looking at TA. Any entry that you make is at your own discretion and not that of Unity Trading Group.
Thanks for that, bro.
You're welcome.
I could have done that at the end of the video as well.
Let's do it now just in case.
Yeah, cool. All right, the DXY, so the US dollar currency index, is on a phenomenal run to the upside, even though they're still printing money, so that's always fun. But anyway, we're looking at this level of supply right now off this major market pivot. All right, so you've got that one there. If you're wondering how I drew that, the green candle just here to the left. Fast forward to now, we're looking at basically a tweezer top off this supply zone here. This is on the daily, mind you, where we've busted through this one. So to answer your question before, Dill, I think it was, could you use a break in demand as a short signal? So this is the opposite round, break in demand for a long, pretty much. That answers that. So yes, you can use a break in supply for a long signal if you're looking for something like that. But anyway, we're looking at this DXYB pretty much rejected at this level of supply finally, after a decent run from the 9th of March all the way to now. So you're looking at just under half a month worth of longs. But right now, looking at our fib retracement level, swing low to swing high. The next level that I want to see respected is the 23, and quite possibly back down to retest this level of supply here, which was supply obviously, at the 38. So it could be, and more than likely for bullish momentum, that we do bounce off the 23 and the 38 before a continuous move up, and we have seen that in a lot of markets, even crypto in the past. So that's what I'm looking at right now. 23, 101.02 and 99.79 would be the two levels that I'd be looking at for a continuation for the DXY. If we flick over to oil is seeing this relentless rundown. Obviously, everyone is aware of it, and the oil prices are tumbling. Sorry, Dill, where would you place a stop if you were? So if you're looking at a break in supply, you'd obviously put your stop with market structure. You always use market structure for your stops.
So as just very quickly, Dylan has asked, which you're answering now, but just for those who don't see the question, he said, where would you place a stop if you were to long a break in supply or short a break in demand, just below or above the original range?
Like I said to you before, it's very difficult to put your stops on the opposite side of the zone. So if you're shorting here, for example, it's very difficult to put your stops up here because, like I said to you, it can go the other way and make a lower high before it continues down. So always just use market structure and use your best judgment on the time frame that you're trading. If you got a short there, obviously market structure says that your stop should be above previous structure, and then obviously allocating your position size to suit that. So yeah, it's a little bit tricky to do it the way that you were asking, but you can, but it's extremely risky and tricky. So I probably wouldn't do it that way. Use market structure for the short version. Okay, so looking at oil, we were looking at this a couple of weeks ago for this trend-based fibs. I know it's hard to see how it's drawn, but that's just the nature of the move because we had such a big move down. But we're looking at the 4236 extension on this pullback, and we're looking like we're just floating around it, to be honest, at the moment. I don't think oil's going to really push down again further than $20 a barrel. It doesn't look like it's got any room on the indicators and stuff like that to do that. I think it will just range sideways like most of these pairs are doing for a little while. No, especially in crypto, but I think around the 4236, around the 23 level, we could just range around. I'd be very interested to see if we do come up to the $28 mark and start to head down. So there's a lot of market structure for this to really get through to come back. We're looking at this short-term level of supply here at the $30 mark, $30 a barrel. And look, we could even range all the way up to there before we make a decision on which direction this is going to head into. So a lot of our indicators are saying this is the bottom, or this is very close to the bottom. So I'm waiting for more confirmation on that. I wouldn't be entering any sort of positions right now on oil, pending some more data to come through during the course of this trading week. Moving on though, if we're looking at the SPX 500, so top 500 US stocks, exactly my point, Dylan. If you're looking at shorting a break, exactly my point. So this is a very, very good example of that question you just asked. So good question. Although there is a lot of room for this asset or this index to continue down. So we've got demands all the way back down to even the 2000 point mark. If this continues, we could always head back down to 2000 points on the index, and that would be a monumentous move down from where we were. So anyway, looking at this, we've had a lot of pauses in the market on the way down. So as we go down, we have these big candles up before a continuation, and then again and again and again. So don't be surprised if this is another one of those pauses where we just fizzle out and continue to head down towards that 2000 point mark. So again, with a lot of people that I've been speaking to about stocks and regulated stuff, is just wait for some sort of moves up, wait for some sort of moves up and wait for some market structure to start ascending before we finally say this is over. So just hold on to your hats, be patient, because there's opportunities everywhere. So don't try and catch a falling knife, is what I'm trying to say. So let it do its thing, let it find a bottom, and we can call it then. So that's the SPX 500. If we head over to the All Ords, which is what most of us are looking at over the last couple of weeks, it's in the exact same boat as the SPX, because if the SPX does something, the All Ords does it as well. But we're looking at a whole bunch of potential levels that we can draw our demand, but we'll throw it on the 3-day to try and get some more market structure to do that. So quite obvious one is this one, where we've got that V and that pivot. So we're looking at this entire move here, and then if we come all the way back down, we're looking at more than likely, towards this area here at the 4,000 and the 4,300 point mark on this index, and we've got just shy of a touch on that 3-day level of demand. But this is an exact same boat. We've got a lot of structure to get through. We've got a lot of money that needs to be pumped into this market to try and get it back to where it was. And if you're going to ask me, this is the next level of supply. If we're looking at immediate structure, so there is a lot of money that needs to fly back into this market to see this back where it was. So this is basically 10 years, or probably less, probably 5 years worth of gains wipe off the chart in 34 days, just over a month. A month of downage has destroyed 10 years of gains pretty much on these markets. So we're looking at, what are we looking at now as terms of losses? 39%. During the last GFC, if you look at the All Ords chart, and a lot of the charts reflect the same thing. If you look at 2008 to 2009, we fell around between 45 and 55% over 450 days. We're at 40% now, and we're at 34 days. Yeah, you're looking at roughly the same sort of downage that took over a year and a half in 1 month.
Crazy.
1 month. This is well and truly a recession. If this isn't a recession, I have no idea what is.
100%.
That's billions and trillions of dollars wiped off the face of these markets in 1 month.
We were a few months too late. I thought 2021 was going to be it, but we got there a little bit earlier.
We have, not to toot our own horn, we've been saying this the writing on the wall. It needed to happen. It's unfortunate that it happened in these circumstances. Like, we've got a financial meltdown, we've got people losing their jobs. It's extremely dire, and it's extremely sad, and my heart goes out to everybody that's affected.
100%.
But make no mistake, a recession was on the horizon. Make no mistake. And we've been saying it for the guys that have been in the OGs, the guys that have been in the inner circle since the start, over a year now. We've been saying this for ages, and those guys can vouch for that. Like, the writing was on the wall. If you look at some of these stocks, like, for example, let's look at Amazon Inc. You can't tell me this can keep going up forever. Like, Google, for example, another one. Like, this is not sustainable. Another one is Apple. A lot of these blue chip, a lot of these Silicon Valley stocks that have been running since their inception, it keeps going. Look at that. That's not sustainable. There needs to be some form of significant pullback. And unfortunately, the circumstances around COVID-19 has really, done that for us. But it's it's been writing on the wall for a long time, because you can't just keep propping up these stocks and just keep buying and buying and buying, because the money, it runs out eventually. So it comes a time when there's no more buyers. And it's the same thing you saw with BTC at 20k. Well, we hit 20k and then there was no more money. Exactly, Ace. Ace, without the COVID-19, the COVID bubble, it would have gotten even bigger. That's correct. Look, we might get lucky. The markets might get lucky. We might, only fall for another couple of weeks. But the way these markets have been trending upwards for so long, it's more than likely than not that they will continue to fall for not a full year. I don't think it'll be another 450 days again, to be honest, because the world space right now is a lot different to it was back then. Obviously, things move a lot faster now, and we've got social media and everything like that. So everything moves 10 times faster than it did back then, obviously. So I don't see these pullbacks lasting that long, but there definitely needed to be one. Yeah. Yeah, so Afterpay, Boeing, a lot of these stocks are getting nailed. Even ZipPay got nailed. Like even those, all the financial sector stocks got nailed. Everything got smashed. Like whatever it was, it got smashed. Like mining. So it is what it is. Like Ace, I'll give you an example. I had Zip as well. Like it's not too bad because there's golden buying opportunities coming. So it's not all doom and gloom, but it is what it is. I know a lot of people, even people close to me, that have had big money in stocks that have gone the way that they didn't want it to go because they just didn't see it coming. Not now, anyway. So everyone's in the same boat. So don't feel bad. There's a lot of people in the same boat. There's a lot of people that have superannuation that's $400,000 down. Some people in super. Yeah, absolutely. There's with he's referring to ZipPay. There is good fundamentals long term. Like if you do your background research on the companies that I've spoken about in the past, there is extremely strong fundamentals going for them. We won't go through that now, but yeah, you know what they are. But yeah, anyone else want to have a chat about anything else before we wrap up?
Let's have a quick look at gold and silver ads.
Oh yeah, gold and silver. Sorry, I forgot about that. So silver is one that was that did the opposite to what everyone thinks a precious metal does in a recession. So caught a lot of people off guard. But anyway, looking at this, we had
demand respected perfectly.
Sort of. We did have a week through it, but it is what it is. Nothing's perfect. So you would probably be pretty insane to open a short at this level of demand with this, being so dire, or this being so low.
Steamroller as well, giving us the goods on that one.
Yeah, so obviously using that level as support for that theory that it's going to bounce. But it has bounced anyway, and it's done, what are we looking at, 21% or nearly, or probably 20%, 19 and a bit from that demand level. So it's got a fair way to go back to where it was for that full recovery. It's not impossible, but it can happen back to $17. We'll have to see how this runs over the next couple of weeks, but it's still in a decent spot where we've got the CCI, RSI, steamroller giving us those long signals. That's on a 3-day chart. If we zoom into a daily, we'd probably get some more rounded bottoms. Yeah, so V bottom on CCI, that rounded bottom on the RSI, and then obviously steamroller giving us that nice round bottom where we've got these candles respected on that demand level there. This level is probably going to be where it will end up eventually. All right, there's probably going to be a whole bunch of market structure in between, I would think. This probably won't run straight back up to it. But yeah, that's silver. Gold, on the other hand, where is it? There it is. Move it up. Gold is in the exact same position, but in the gold's case, our level of demand was respected a little bit better. We were using this candle that pushed us out of that zone, and then obviously we had that cluster or that accumulation where we did get respected again on that level. So we've obviously got that confirmation that level is there. Coming back down here on the 13th of March, so about 2 weeks ago, where we did bounce off gold, and then heading back up to more than likely around this range here at $1,660 on gold, Ty. So it's on its way. It's on its way. If you're trading this on the 4 hour, there's going to be a lot more structure in between that it needs to get through, but on a daily, that's well on its way back to a decent recovery, Ty. So I think that's what
100%. And seeing a few people make some money off silver and gold in the last few days, so that was really, really good to see.
Mm-hmm. Remember to zoom out. Remember to look at your high time frames for some confluence in which direction the market's going to go. And obviously, the zones on the higher time frames are going to hold way more weight than the zones on the lower time frames. So, yeah, keep those in mind when you're looking at entering or longing or shorting these metals, Ty.
Yeah, 100%.
Perfect.
All right. Well, if anybody has anything else they'd like us to cover, now is the time to do it. If not, don't forget you can go to our 14-day access for free inner circle access. Obviously, you get to understand our steamroller, our Unimoku, trend breaker, Unicon indicators as well, and ask any questions and get 24 access to not only myself and ads, but to our entire trading community. We literally have the strongest group of traders I think we've ever had in 3 and a bit years or 2 and a bit years of doing our trading groups now. It's been an absolute pleasure to trade with you all. In terms of the trading strategy, Dill, I won't go through that tonight, but I'm probably thinking that I'll probably be online again this Friday night if anybody wants to join for a scalping sesh. It's not super official, but I'm feeling like I think that's what I want to do this Friday night, do another scalping sesh. But between Thursday and Friday, we're going to be an absolute content machine here at UTG. I'm going to get the Garn fan strategy. I'll probably do a little bit on the scalping strategy as well, and a few other things that have been requested over to this Thursday and Friday while I'm at home. I'll record a bunch of stuff for everyone inside the inner circle. So if you want to learn that content, get inside the inner circle. Dylan, you'll lay off the pre-drinks before. Michael, you're going to be here for this Friday night. Well, we'll get a bit of a poll inside the inner circle and see who's going to be there for this Friday night. See if it's worth going live for that one again. Ads, what are you doing Friday night?
No idea.
Probably hanging
scalping.
Now, scalping, you reckon?
We'll see.
All right. I reckon we'll see how we go with that one. But yeah, thanks for joining us, everyone. We'll see you on Thursday night for our next market scan. In the meantime, as I said, feel free to go to the 14-day session, or you can ask plenty of questions inside the Discord. Happy to answer them all in the meantime. Got plenty of time on our hands. Let's make the most of it and trade the shit out of this market and make some money.
Catch us later.
See you guys. Bye-bye.